Hey everybody, and welcome back. Today's video, we're going to be going over personal financial statements. A lot of people get these because they have loans with the SBA. They might have a car loan or a mortgage that requires an annual personal financial statement. Usually this is a combination of the different assets that you own, the different liabilities that you have, and also any type of income that you have coming in as well. A lot of times you might have insurance policies shown on this, value of your car, and also any type of life insurance. So there's a lot of different pieces that go onto this. There might even be investments along with IRA. So a lot of banks require you to put this together at the close of the year, shortly after you get your income taxes back. So when you're completing these, you'll want to have your business tax returns, and then you also want to have your personal tax returns in order to complete this. So stick around, we're going to do a screen share. I'm going to walk you through all the different points of a personal financial statement, and this one in particular is for the SBA. Stick around and we'll give you some information. Hopefully you'll find it useful. So this is the personal financial statement form for the Small Business Administration right here, SBA. And today we're going to be going over all the different pieces included within it. So it's a 2-page form, pretty straightforward, but sometimes things can be a little confusing and we get a few questions on this. So we'd like to put this video together to walk through all the different pieces. A lot of times you're going to be getting this as of the end of the year. They might ask for a different end date depending on your fiscal year. Here you will put your name, business phone number, residence address, residence phone number, city, state, and zip code, and the name of your business. A lot of times these are in conjunction with a business, especially if it's going to be for the U.S. Small Business Administration. So the first part is the assets. Here you'll put your cash on hand and in banks right there, and then also savings accounts. This might be CDs that you don't have readily available. Cash on hand is pretty easy, whatever you have in your checking account. One thing to remember is that you won't put your cash balances in here from your business. You'll leave that included in other assets. You'll end up figuring the equity amount that you have and put that business value down here. But you'll start with cash on hand in the banks and savings account. Then move on to retirement accounts such as 401k, traditional or Roth IRA, 403b, and any type of pension value you might have, you'll put here. Down here is accounts and notes receivable. This might be money that is owed to you if someone is borrowing money, or for some reason you have accounts receivable from somebody. This is where you'll put the collectible value that you expect to receive. Life insurance, cash surrender value only. You'll complete section 8, which we will scroll down to that. But that would be your cash surrender value, which you will find on your life insurance statement. If you can't find that value, talk with your insurance agent just to be sure and see if they can provide that to you. We'll scroll down to section 8 now. And this has you give the face amount and cash surrender value of the policies and the name of the insurance company and beneficiaries. So this is always a good thing too, because then you can be sure to update your beneficiaries, making sure that your beneficiaries are who you want them to be. But you'll list that down here. Sometimes the SBA might be listed as a beneficiary if they have a loan that you owe them. Scroll back up. Here is the stocks and bonds. This would be any type of investments in equities, bonds, mutual funds. These particular items wouldn't be included in any type of retirement vehicle. Moving on to the real estate. And I do want to mention for stocks and bonds, you'll describe them in more detail in section 3, so we'll scroll there. So this will ask for stocks and bonds, and you can add attachments here as necessary. Each attachment must be identified as part of this statement and signed. It might be a bit of work to record all this, but it's important that you should go through the number of shares you have, name of the security, the cost, the market value, and quotation of exchange. You'll do this as of the 12/31/2019 in this example. Then you'll put in the total values, the date of quotation or exchange, and fill in the other boxes. For real estate, this might be the home that you live in. It could be rental properties that you have, land, any type of real estate that you own will go here. The total value. We'll scroll down to section 4, and this has you describe the type of property, list the address, the date of purchase, the original cost, the present market value, the name and address of the mortgage holder. So if you have a mortgage with Wells Fargo, you'll list Wells Fargo, and that lists your mortgage account number, the balance for the mortgage, the amount of payment per month, and then per year, and then the status of the mortgage. So you might put current if not in default. Then you would continue to list the different properties that you have. Again, list each part separately and attach an attachment if necessary. Each attachment must be identified as part of this statement and signed as it was before. So the more items you have means more work to complete this. For the automobiles, this is the present value. You can use the Kelley Blue Book app to find that value. If you have multiple vehicles, you'll add them up and record that value in this box. Other personal property described in section 5. This might include any expensive or higher valued items in your house, such as anything that would be appraised or insured, like jewelry, an engagement ring, precious metals, or any other item you might have in your house that would have significant value. So we'll scroll down to section 5, other personal property and other assets. So you'll just describe it here. This is also where you'll include other assets and would include the business you might own. This would be the assets minus the liabilities to get the equity amount, which you will then put the amount right here. This will give you the net value that you own for that business. In a case where you don't have any net assets and your liabilities are higher than the assets, that would go here under other liabilities. We're going to assume that the business has more assets than liabilities, and so that value will go here. Add up the total assets, and you'll place that on the bottom line. Up next, we have liabilities. Under here, you'll see accounts payable. This might include amounts you owe on your credit card and any other type of accounts payable that you personally have. Next, you'll see notes payable to banks and others. This is if a bank gives you a loan or if an individual gives you a loan, and you can describe that in section 2. Right here, it says name and address of note holder. This is the name and the address of the note holder, the bank or individual that you owe money to. You'll put the original balance of the loan, the current balance, which is what you'll owe as of 12/31/2019, the payment you made, such as if you make it on a monthly basis, and then the frequency. And then the how secured or endorsed type of collateral. So this might be if you put any type of assets up for collateral against the loan. A lot of times people might ask for an asset to be part of the collateral against that amount. So we'll scroll up. Here you have an installment loan on your automobile. This would be how much you owe on your automobile. So you'll put here monthly payments and the total amount you owe for the car. If you have multiple cars, you'll add that up and put it here. Here is the installment account for other. This would be the total amount you owe for other debt and the monthly payments here. Down here is the loan on life insurance. Some policies allow you to take a loan out against it, and you would put it here because it would need to be repaid. If you have questions about that, I would suggest contacting your insurance agent. Down here, we have mortgages on real estate, which is described in Section 4, which we've previously talked about on the asset side. You'll put the mortgage account holder, address, account number, and the balance which you would correspond to the section up here. Unpaid taxes. This is any type of federal, state, local taxes that you still owe. You describe it in Section 6. We'll go down to Section 6, and you'll read the description. Describe in detail as to type, to whom payable, when due, amount, and to what property, if any, a tax lien attaches. So this might even be real estate taxes, it could be local taxes, business privilege tax, mercantile tax. You'll put that here if it's been unpaid. Scrolling up, other liabilities, as I mentioned before, might include the business that you own if you have negative equity, as in your liabilities outweigh your assets. You would also describe it in Section 7, which we will scroll there, and describe in a detail along with any other liabilities you might have. After you enter other liabilities, you'll total up all your total liabilities and put that total here in the total liabilities column. Then you will calculate the net worth, which is when you take your assets minus your liabilities, and you'll arrive at that number for your net worth. This particular total seems to be redundant, as you're listing your total liabilities here and your total net worth here, so it seems a bit redundant on this particular one. Source of income, here you would put your salary, like a W-2, then net investment income would be like if you had a K-1. Real estate income, which should be located on a Schedule E on your tax return, and then other income, which you would describe below here in Section 1. One of the things to mention that if you've completed your 2019 taxes or the most recent year-ended taxes, you can use that pretty easily to record all of these amounts. Contingent liabilities. This is where you'll put if you're an endorser or co-maker on a loan. So if you've signed a loan for somebody else and your name is on it, you'll put that here. If there's any legal claims or judgments against you, you'll add that onto this spot. A lot of times it's difficult to figure out how much you might be on the hook for when it comes to a lawsuit, but you put your potential exposure right here, reasonable amount. And then provision for federal income tax. This is where you'd put the federal income tax amount that you owe, and then other special debt, you can put that there if it applies. So a lot of these fall in the spectrum of what we already talked about in areas above. So once you get your assets, liabilities, source of income, and contingent liabilities, you've essentially completed it. We'll scroll down through. We acknowledge that Section 1 we've talked about, Section 2, notes payable to other banks and others, stocks and bonds under Section 3, your real estate owned under Section 4, other personal property and assets under Section 5, unpaid taxes under Section 6. Section 7 is other liabilities, describing in detail. Section 8 is life insurance held. Right here, on this particular form, there's a bit of a statement certifying that everything included above is accurate as of the stated dates. Here's where you would sign, date it, and include your social security number. One of the things to mention, if there's another individual involved with a particular loan, you'll want them to fill in the information here. Once you have all of that information, that should be enough to complete this particular form. If you have any comments, please leave it down below. We'll try to respond back to your questions. And if you have any recommendations on this video or any other videos, feel free to reach out to us. All right, so there you have it. That's how you fill out the SBA personal financial statement. It's pretty straightforward, but there can be a couple confusing parts on it. Hopefully you found this video interesting and helpful. We try to create these when we get these same questions from a lot of people, and then we're able to just share the videos. So if you know somebody that's completing this personal financial statement, feel free to pass this video along to them. It could prove pretty helpful. And if you ever have any questions, always feel free to reach out to us. We're happy to help. Have a good day.